Welcome back. You're watching Buy Now, Sell Now, and yes, let's get connected with the management. We're talking about Shadowfax, stellar Q4 results. PAT grew almost 5x year on year, and also the launch of Shadowfax 360. What's in store for more acquisitions, and how is the network expanding? Let's get connected with the management. We are joined by Abhishek Bansal, CEO, co-founder, Shadowfax. Hi. Welcome to the studio. Nice to have you over here. Congratulations on the results as well. But then before we dive into the diagnosis of the results, just want to know the entire mood around the fuel prices. How are you looking at the impact for your company, for the sector as well?
Well, there's definitely a lot of volatility, a lot of uncertainty in the global markets. But what we can tell you is that the bullishness around the consumption in the country is higher than ever. And that's what we have seen in our Q4 results. We are carrying a very heavy momentum of demand into quarter one as well today. In logistics, today about close to 10% of our cost is fuel cost. So about a 3-4% increase in fuel prices typically impacts 20-30 basis points in terms of fuel. So not a very meaningful number from serving end customer standpoint. I think what we have seen typically is that when some of the macro factors like global travel, people stay more at home, they tend to order more home deliveries, and the business definitely grows much faster. So I think some of those discretionary spends like travel and hospitality, probably if they go down, the spend on e-commerce goes up.
Right. But Abhishek, you mentioned that there is no material impact because of the fuel prices. But a logistic business is usually run on the delivery partners.
Yep.
And we've been hearing of late that the delivery partners are going back home, back to their villages because of the rising cost of living and so on. In fact, a lot of roadblocks that we are facing, whether it's the delivery time or the lesser number of partners, that definitely will have an impact on the business. And how are you planning to navigate through that?
Yeah. No, I think when there's a supply crunch, third-party logistic companies actually have a great time because more business comes to us. That's the trend we have been seeing over the last 2 quarters now. Interestingly, people going back home is a very seasonal affair. This time, probably we are linking it to multiple other macroeconomic factors. It's been happening every year. Summertime, April, May, June is a time when people also travel, families travel, and delivery partners also go back home. So it's something we've been seeing for the last 5 years. This is a time when there's always a supply crunch, delivery timelines always get extended. So nothing new in the business. And I think businesses in logistics are pretty much built around taking care of that uncertainty. So we have structures on how do we solve for that, how do we look for a different class of people working in our space specifically for this season. I think we have learned and we have solved for that as an industry.
Strategized it really well.
Yes.
Okay, let's talk about the numbers and let's put focus on your EBIT margins where we've seen improvement despite your aggressive expansion, if I can say that. So what should be the expectation going ahead? Are you maintaining this momentum?
Definitely maintaining the momentum. From a market standpoint, we are guiding the overall market of an improvement of 100 to 120 basis points from where we are today for the next 2 years. Post FY28, we are looking for a guidance of anywhere between 200 to 250 basis points every year till FY30. At a steady state, we expect a business like ours is going to give a early double-digit EBITDA margin. And this is something which we are seeing coming through operating leverage across the board. We are also seeing a lot of operational inefficiencies getting killed as we are scaling up our business. Getting into some of the high value segments like critical logistics, D2C brands is also helping us basically improve our profitability.
Right. Abhishek, you've also launched Shadowfax 360 to target the SMEs and the D2C brands directly. Does this really mark a strategic shift away from your dependence on the large players or the large e-commerce platforms? And over time, what share of revenues do you expect from the SME or D2C ecosystem?
Yeah. No, I think it's very natural for a large logistics company like us to basically diversify and go after the long tail once the large enterprises are solved for. I think today we are lucky to be in that sort of a stage. We have launched this product, Shadowfax 360, which is extremely focused on SMEs and D2C brands. What we are simply offering through the service is what we call as a prime service. It is basically same day delivery, next day delivery. We are solving for speed so that the small sellers in this country are able to compete with the quick commerce value proposition. Think about it, in India, there are about 15 lakh sellers who are selling online either through horizontal marketplaces or through their own platform. Out of that, only 20% actually sell directly to the customer. We believe with AI, with more democratization happening in the country over the next few years, this funnel is going to widen up aggressively, both in terms of number of sellers who are selling online and also the sellers who are going to sell directly. This product is exactly catered to that proposition, where we want to make even the smallest seller, a smallest brand in the country, able to get the best service that even a large platform today has.
So what about dealing with your competitors? Because this is a very intense segment. So the parameters that you just highlighted, are you also trying to compete on those lines, or you're just going way ahead with new strategies maybe?
See, our strategy around competition has been pretty clear from day one. It is about focusing on value-added services, doing something different. We are not in a price game here at all. And logistics is never a winner-take-all market. You will always have competition because our sellers, our marketplaces always want multiple players to serve with them. Interestingly, over the last 1 year, what we have also observed is that India's market has got slightly more consolidated from a 3PL standpoint, and the top 2-3 players continue to have a increasing market share out of the overall 3PL segment. So while there is going to be competition, we appreciate it. Our strategy is to offer differentiated services that helps us stand apart from everyone.
Right. Abhishek, you've also invested heavily in automation and launched the one NCR sortation hub with capacity of 48,000 shipments per hour. At what utilization level do these automation investments begin materially improving margins and lowering per cost shipments?
Yeah, that's a great point actually. One NCR is just beginning of our first setup of multiple such facilities across the country over the next few years. It's probably one of the largest facilities we have set up, fully automated, and the amount of time that it takes to set up is also increasingly high. We typically start setting up such facilities when we already expect that on day one our utilization is going to be 40-50%. So it is not big hit to our margins over a period of time. So we expect these kind of facilities bring a lot of long-term operating leverage, help us automate a lot of manual stuff, reduce our manpower cost per order over a period of time. And as just said, this is just a beginning of our strategy to invest into mega sort centers to power the e-commerce in this country.
Partner expenses, almost 52% of your revenues. Any further improvement or any strategies to get it better?
So partner expenses are typically, think about any sort of an e-commerce transaction, any digital transaction, 50% of your cost is always going to be there in the last mile, and that is what this cost typically represents. What we have seen over a period of time, and if you look at our financials year on year, the percentage has gone down as compared to the overall cost. What happens is that as you get more and more orders in e-commerce, your order density goes up. Your same partner is able to deliver more orders per hour as part of the overall business. Typically, some part of it, we take it in the P&L, some part of it, we pass it back to our customers. But this is a classic case of having a variabilized cost base, but with operating leverage.
Right. Abhishek, so I believe this is your second earnings that you come out with after listing. And it's been a good set coming in right now, but given the geopolitical situation and so on, do you see the growth guidance to maintaining the growth path ahead as well, or what would be your guidance?
So we continue to give a guidance of 28 to 30% growth year on year, which is again outpacing the overall growth of the market. So we continue giving that guidance. What we have seen is that in India, even with the external environment being so volatile, India's consumption story probably stays extremely strong. Every brand, every marketplace, every type of business we have been working over the last 2 quarters, we have seen baseline growth over there. So that's something which is very, very exciting for the industry despite all the global volatility.
All right, so consumption is the story. Thank you so much for being there with us and talking to us and coming to the studio and joining. Thank you.
Thank you.
Thank you.
All right.